Well, good morning, everybody. Second. Sorry, that was my fault. My inevitable audio problem. Fix that. Testing. Testing again. There we go. That should be right. All right, we're recording. And I have a special guest with me, which I will get to here in just a couple of minutes. Is audio is good? Okay, everybody's good for everybody. We are recording. Let's see here. Sorry, I need to move a window out of the way. Getting feedback from somewhere. Hold on. This is on my side. No, I'm just gonna have to live with it. Okay, so November 18, with a special guest today. Man. No, I'm here. This is going to be a crazy one for me because I have to listen to myself 3 times. And once is enough as far as I'm concerned. All right, so our agenda today, changes to email alerts. These are coming to you in the next 7 to 14 days. I'll also be, actually quickly tell you that the calendar and portfolio editions will be coming in December. I'll be introducing my special guest today, which I'm very excited about. And my guest will be taking you through market analysis and ideas about things to trade. And we'll also be talking about a special workshop that will be coming up on December 10th. To get started with email alerts, they will be coming to you from the Traders Reserve Live platform. Email alerts will look different. They will mirror the way that we publish them to the Traders Reserve Live site, which means that email alerts will contain trade execution details only. And we'll have a one-to-one relationship between the alert and the email. That means that each alert will have its own email. And please wait before you get mad at me. I'll explain why I'm making this change and how you're not losing anything. So to do that, let me take you inside a trading session from last week. This was Income Masters on November 12th. We made 5 trades. That session began at 12:30 p.m. The first alert was posted at 12:39 p.m. That would have been then posted to the Traders Reserve Live site and would have gone out via push notification. The last alert from that session posted at 1:08 p.m. and also would have been published at the Traders Reserve Live site and via push notification. The session didn't end until 1:25 p.m. and the email alert did not drop until 1:34, which means there was a 55-minute lag between the first alert and the email. In a session like like Income Masters, 5K Challenge, Millionaires Trading Club, etc., that is too long. That is literally money that can be lost by premium degradation in that period of time. And there's no way to make email faster when we're combining all of the alerts from a trading session because of the volume of the text, so to speak. Emily has to get all of the strikes, all of the premiums, all of the expirations, all of that correct. And if we're doing a multi-leg trade, that takes time. So email will now be coming to you shortly, direct from the Traders Reserve platform. We will continue to publish alert posts. The alert post has all of the text of the alerts. All of the alerts are combined into a single post, and that includes the why, the rationale behind the trade, etc. And it includes, or will include, all of the trades from a specific trading session. So from a process perspective, as we are making trades during a live trading session, those alerts will be going out during the session, and at the end, we will then publish the trade post. To access alert posts, there is a submenu on the left-hand side directly beneath alerts. And in that is the alert posts. That gives you access to all of the trade alerts, recordings, etc., that have taken place in any of the services you are subscribed to. There. That will also, hang on, man, stop changing my default speaker, damn it. Oh, sorry, you weren't supposed to hear that. So here's an example of an alert post from Options Income Weekly. This is a multi-alert post, so that was Citibank, Celsius, Wayfair. This is what we're maintaining inside of the alert posts, but taking out of the email alerts. So it is that the details, the explanation, the rationale, or the why of the trade, it will still be available. It's just going to only be available in the alert post section. So that will then also include all of the trade details in a single post. So for those of you who want the why, or for those of you who print out your alerts, you'll still be able to do that. Instead of having to print an email, you can print directly from the alert post page. That printing strips out everything, all of the extraneous website information. So you're just printing out the actual alert post. So that should be a little easier. The last step is to make sure that email alerts are enabled on the Traders Reserve Live platform. To do that, in the top right corner of the website is your name and your little name badge, which has your initials in it. And in the submenu there is notification settings. And in notification settings, will take you to this area, alert settings, which has email, SMS, and push. Don't worry about SMS. If you're using push notifications, that would show up as enabled, but you want to make sure that the box next underneath email alerts is checked. Now we have it set as being checked by default whenever we create a new customer account inside of the platform. So it should already be checked. If you've unchecked it or something went wrong, just click the little box next to enabled alerts. It should look the way that I have it here, with a blue box with a little white check mark, and then click save. And then that will ensure that you are enabled for email alerts. Another key point, I didn't put this on a slide for you, is this: your email address, which is a little higher up in your profile settings, is the email address that those alerts will be sent to. So make sure, because that's your user name essentially. So make sure that if you have alternate email addresses, we'll need to talk to you via support and come up with a different way. We may have to create a second account for you that's just for email alerts. But if you're using multiple email addresses, as I know a few people are, before we turn this on, I'll give you a heads up so that you can reach out to Mike and Leslie in support and make sure that you get alerts at any of the email addresses that you have asked for them to be sent to. This is like being at NASA at Houston. This is going to be a go, no go situation. So I will give you a heads up the weekend or the week before we are going to turn this on, so you know when to expect it. And that will mean that email alerts will now be instantaneous, near instantaneous, to when we publish them on the Traders Reserve Live site. And once that is rolling, if we have any issues, we'll work to correct them, any bugs, et cetera. But we'll be testing it this week. And then I expect probably not next week being the holiday week, but the week after Thanksgiving. So heading into the first week of December is when I would expect to make this change. So I wanted to make sure you knew it was coming, what it entailed, and more importantly, why we're doing it. I do realize, and I apologize, it will increase the volume of email from us on the alert side, but it changes, it does so in a way that's favorable to you in terms of being able to execute at the premiums closest to ours if you cannot make a live trading session. And with volatility likely to tick up, that's important. So that's the major change that's coming. And I'm going to move now to introducing my special guest. I'm really, really excited about this. I would like to ask you to welcome Marque Latimer. I'll give you a little background on her in just a second. Marque is a full-time professional trader. She is also an educator, trainer, and has been in the markets for over 20 years. And I was introduced to her by a third party. And the main reason that I think you're going to enjoy what you have to learn from her is because she fills a significant gap for us at Traders Reserve. And what I mean by that is her technical analysis, her charting skills, number one, and also because she is on the not just stock trading, but also on both buy and sell side in the options market. So there is a breadth and depth to her expertise and her experience that we have a chance to bring to you today. And she, as I said, has been trading for over 20 years. She's a former trainer for Better Trades, which I believe is a company that's no longer in existence. And for the last several years, she has been on her own as a like us, as a semi-publisher, providing everything from market analysis to coaching and trading and education to followers of her approach to trading stocks and options, and advanced options too. She does some advanced stuff. That's pretty cool. So with that, Marque, I'd like to welcome you and say hello. I think you have to unmute, and then I can give you the screen here. And then her really cool story is that she turn $2,000 into $2 million, but I don't want to steal the story. So I'll let you tell that one, Marquet. Welcome to Traders Reserve.
Hey, thanks, John. All right. Well, thank you. Thank you. Yeah, you want me to just go? I've got, I don't know, you guys, if you care to hear the story, I can tell you I mean, that's essentially it. I'll give you the super short version. Story time. Hey, Jeff. Is this the Jeff I know? I hope it is. I was so excited when I saw your name here. Anyway, I started trading years ago. So I graduated with a degree in public relations, wanted to go to med school, actually. Didn't want to take math classes, so I decided to do PR instead, changed my mind. Now I've got a bachelor's degree, but I got to figure out how to pay for med school. And I found the stock market, started trading. Here's the long story really short. I just started doing really well. And it was a lot of bumps, a lot of problems, a lot of not doing well until I kind of figured it out. And I had a lot of help. I had some really good mentors, and I learned to focus on the chart and use that to time my entries and my exits. And that's where I took that 2,000 to 2 million, and it was in 2 years. And then I broke the market because that was right at 2,000. And I will tell you, I took a big hefty loss too, right at that 2000 market crash. So that was not fun. So I lost probably about $500,000 within that first month, because I didn't know, we'd never known how to deal with a bear market. My entire trading had been bull markets. The bear market was something that happened in the 70s that was never going to happen again, right? Was what I had been taught. So anyway, I learned, and I've been able to survive and stick around and learn how to trade different markets. And I feel like you're never going to be a good trader until you've experienced every single market condition, meaning really bullish markets, really bearish markets, really choppy markets, and slow, low volatility markets. Until you've experienced it, you just don't know, right? So it's just kind of, now I'm wise. I'm wise. I'm not old. I'm wise. So I've experienced a lot of different markets. So let me show you. Hey, oh, Vlad, you're so sweet. Does everybody see the chat here? I don't know how this works with Zoom, but that's very sweet of you. All right. Let me, here's what I'm going to do. I'm going to steal the screen share, John.
It is all yours.
Perfect. All right. So there we go. You should be looking at charts. Now, for my charting, I mostly just use TradingView. And now I've got my brokerage platform, and that's a whole nother conversation. I'm trying to find a new broker right now. I mainly use TradeStation. I have Schwab and Thinkorswim. I have all those. But anyway, for my kind of research and my watch list, I just love using TradingView. So that's what you're looking at right here. I'll give you just a quick rundown in case I'm assuming you can kind of just look at this and recognize what I'm using, but just so you know what I'm doing, I put moving averages and Bollinger Bands on my charts almost always. And this is one of the things that I learned back when I was charting. And here's what quick side note back to my story for a minute. I had started out doing bull put and bear call spreads. And it just wasn't working. Nothing I did would work. And I couldn't figure it out. And this is where I had this really good mentor that said, hey, Marquet, why don't you just learn to read the chart? And at the time, I really thought he was ridiculous. It actually kind of irritated me that he said, go and look at these charts. They'll tell you how to trade. And I thought, you're kidding me, right? Like, that's looking at the past. What on earth does that have to do with the future? But I was so motivated to learn how to make this work. By the way, this is another side thing. I've gone back and wondered, why did I make it work where sometimes people don't? It never occurred to me that this would not work. There wasn't a possibility. It was just, how do I make it work? How do I figure this out, right? It wasn't that I couldn't make money in the market. It's just I had to figure it out. So it's maybe kind of a mental mindset that I think is important for traders to have. But I took these charts as Richard suggested. And I started, trying to play around with them. And I had like probably 20 indicators and a million different charts and bar charts and line charts and everything. And it was not helping me. So I thought, okay, I've really got to give this a fair shot so that I can actually go back to Richard and say, hey, what you told me, it isn't working. So please tell me what you're really doing. Because Richard was pretty successful. So I wanted to be able to talk on his level and say, okay, I know you said this, I did it, it doesn't work. So now what is it that you're really doing that is bringing you all this success? So I started with kind of stripping down my charts, and I just had the price graph. And for me, I think the candlestick charts made the most sense because it kind of shows not just the high and low of the day, but where we opened, where we closed. It gives you a better feel for, I think, what really went on during the day. That's why what you see here on the right-hand side, this is a 1-day chart. So every candle obviously represents 1 day. On the left, I have a 5-minute chart, which sometimes I'll change it out to a 15-minute, more on the side. So I like this. I kind of have this side-by-side view where I have a daily and a 5-minute. But I started with just the candlestick chart, and I worked on that for weeks. And I did a lot of, back testing where I would just go back and back my charts up and then just kind of arrow key forward and practice. It gave me such a better way to really learn chart patterns in a shorter period of time, right? So I would spend hours upon hours doing this, just getting charts, backing them up, practicing. And then slowly I would add in one indicator at a time. And I got a pretty good feel for how the chart patterns work. Then I would add in one indicator, and I would use that for a while until I felt like it either helped me and I kept it, or it didn't help me and I would kick it to the side. And this is sort of what I've ended up with. I mean, well, it is. I love moving averages. I love trading stocks in trends. I feel like there's more money to be made there. I a lot of times go on the long side, buying stock or buying long calls or long puts. And I know there's some downside to that too. I think a lot of you are sellers, and I love the selling side as well. It's great. In some ways, maybe it's just pros and cons, right? Maybe sometimes some ways easier, but your upside is a little bit capped. So I feel like if you could find that balance, it works pretty well. So what you're seeing here on these charts, by the way, is the right here, we've got the 10, 20, and 50 exponential moving averages. And then this blue shading behind, you probably recognize that, but that is the Bollinger Band indicator. And so I used to have different tabs. So I would look at moving averages and then bands and this and that. This TradingView allows me to kind of combine them, but I've got the bands highlighted in a way like a lighter shade so that it doesn't mess up my ability to view the candlestick, which I think is, in my opinion, by far the most important thing. Because when you look at the candles, you're seeing at any given point in time what anybody was willing to buy or sell that stock for. And that's the purest form of analysis that you could get, right? What people are actually, where they're putting their money, right? Where they are buying stock, where they're selling stock. So I've got that. All right, so that's what you're looking at here. On the 5-minute, on the left side here, you've got the same thing, but every candle just represents 5 minutes of time, right? And so what I do is I kind of go through and use these chart patterns and help me find entries and exits. Ideally, I am trying to get in close to a turning point in a stock, right? And so if you guys are okay, what I'll do is I'll show you what I do when I start the week and kind of how I look at the economic calendars. I talk about, kind of look at big picture, what is happening. And then I bring it down to individual stocks and patterns. So, and then I feel like along the way, as I'm doing this, I can show you some of the patterns that I'm using and kind of see how it applies to the markets today. Is that okay? Or if there's anything else you want to see, I can see the chat here. Anything else or anything you have questions about, throw it in the chat. It'll be great. All right, cool. So one of the things I start with every single week, I start with this Econo Day economic calendar. And, it just gives me a big highlight overview of what's happening this week, right? And so they've done a pretty good job of starring with these red stars, anything that's super important. You can see like today we had housing market index and treasury international capital comes out. But tomorrow morning, housing starts and permits. Okay, it's a bigger thing that could affect the markets. We also have some of the Fed governors. They're always going to be listed in bold when they're speaking. We have Wednesday, our weekly petroleum numbers. I feel like the numbers that come out weekly probably have a little bit less of an effect on the markets. You can see as I scroll down here to Thursday, we've got jobless claims, also a weekly number, than existing home sales. So there's really not much news this week, and mostly centered around the housing starts and permits and then existing home sales. And you can see here some Fed governors. But I look at this like the week isn't too busy as far as news. Sometimes you'll have a Fed meeting. You absolutely need to know that because we know that can create some volatility. By the way, if we happen to be on one of the weeks where we had, let's say, a Fed meeting, which we don't, but if we did, on Wednesday, that would be a time that I would almost break up the week into two different trading, I guess, sessions, if you will. I would look at Monday through midday Wednesday as one potential swing trade window. And then I either go back to cash or I really protect stops and wait and see what the Fed says Wednesday and see how the markets really react to what the Fed says Thursday morning and Friday. So kind of have these two different, big overall sessions on a Fed week. This week, you can see on the calendar, there's no Fed, there's not a lot going on. We're the week before a holiday week, obviously. But the biggie, you guys know what the biggie is this week? I think the biggest news item out there is going to come from earnings. We're still in earnings season. And although our main big tech stocks may have announced, there's one that everybody is waiting for. And let me jump over to the charts. And that's NVIDIA. Yep, there you go. It's NVIDIA. So they always announce late, right? So we've heard from pretty much everybody else. We're now in the earnings season of a lot of retail stocks. And so there are a lot, like Ross that I'm interested in trading, TJX, Target, let's see who else. Lowe's announces tomorrow morning. We've got a bunch of those types of stocks. Oh, BJ Wholesale, that's kind of fun. So I'll look for, if we have time, I'll show you a post-earnings trade. But I'll look for trades kind of post-earnings. But the biggest driver, I think, this week will be NVIDIA. I actually thought let's do this. We'll start with the spiders. So I kind of thought our markets might start out weak, potentially with what Biden just did, allowing our missiles to be, shot off into the depths of Russia. So I thought that change over the weekend could potentially put a little pressure on our markets. It really hasn't. So when I'm looking at the markets, the first thing I do is I look at that economic calendar for the week. I get an idea of what's happening. And then I look at a chart of the spiders, and you could look at the actual S&P. I actually trade the spiders quite a bit. So I just use the spiders. It's just a tenth of the value of the S&P. It's a nice way to go just to buy calls or puts on the spiders. They have options that expire every single day. I have a Traders Talk group, and we Friday morning did just a trade in here. I'll show you just a simple little 10 contract put option trade that we got in right about here on this breakdown. You can see the spiders opened up and they were kind of choppy. And this was also Friday over here on the daily chart. You can see Friday we broke big moving average. So we had a bear picture on the daily chart and then a bearish picture on the intraday. And so I did this first part of the trade when I'm day trading, day of expiration, day sort of trades. I keep it pretty quick. So I was in there, and I think it was around here that we were out. And then we moved into a Bollinger Band pinch, and we had another breakdown trade. But just this first one, so I jumped in. Let me show you, just so you can see. Again, it was a breakdown here and out over somewhere in this area. So it was this part of the trade. That part right there, just buying a put option, 10 contracts. It was just $1 and change to get into the trade. And we made $500 on that little trade. And so I go for things like that on the spiders. So you'll see that I look at the spiders often to start. Again, just like a big overview. So when we started the market, before we opened this morning, we know that we had Friday, this big bear candle. We broke a potential uptrend, and we're going into the trading today where it looks like we're kind of helping to escalate maybe some potential war, right? So that's not great. So I wondered if we'd have weakness, but like anything, you need to not trade the news. You have to trade the reaction to the news. We have to trade the stocks and the charts and what they're doing. I try, I'm unfortunately super news junkie. I married a news junkie, political junkie. So I just think it's kind of fascinating. So I'm always watching this stuff. But when it comes to the market, I got to put that aside because I will maybe have my own opinions or my own thoughts. I can't come in. I mean, this probably as traders, you can't come in thinking you're going to tell the market what they're going to do because it's going to do whatever it wants to do. And it often doesn't make sense. So that's why I just have learned, watch the chart, read the tape, right? Let the chart tell you how to trade. So today we started off pretty strong. Our markets opened up. We've got a little consolidation and we've taken off out of this early morning consolidation area and we've been pretty bullish. So I like where we're at on the spiders. It's a bounce basically off of the 20 exponential moving average. The reason moving averages are important to me, we've seen it over here bounce, we've seen it over here bounce. And the more you hear me talk about charting, I'll get into like the little nuances here, but this can be a big deal at times. And clearly today it's helped. Now, another thing that could be a big deal is where we're rallying to Friday's gap down area. And those levels can sometimes hold as resistance. So I'm bullish all the way up to that level. And then if we start to see a sign of weakness here, that would be maybe a profit taking place. Let's say had you moved into a call position on the spiders right here. So now I'm already looking for, if I was, if you're like already in that trade, I'm already looking for my exit, especially if it's a day trade. But that's kind of big picture, how I start looking at the economic calendar. Then I move into the spiders, get a feel for where we're at. Also kind of incorporate news that may have happened and then what is coming up this week as far as like NVIDIA's earnings, right? So that's kind of super big picture. Let's see, let me show you a couple other things here. So I'm watching the spiders to see where we move. We gapped up, by the way, you all know what this was. This was the election, being clear, having a clear winner. I think business friendly, all of that caused our big market, giant gap up. These gap levels can create some support and resistance. So it's just something that we want to be aware of, right? So not only do we have a 20 exponential moving average here, we have a little bit of horizontal potential resistance here. So I would look at that as a place to be a little bit careful. Let me show you a couple other things that are moving in the market. So in addition to NVIDIA, which, by the way, when we're this close to earnings, I only look for little, almost day trades on a company that is as big as NVIDIA that is going to be announcing soon. I used to do a trade over earnings. I used to do a straddle, or actually I do more strangles over earnings. And I used to do them all the time. And I would buy, an out of the money call, out of the money put, front week expiration over an earnings announcement. The problem in our more recent markets here is the options get really inflated. So to be a buyer of both calls and puts over an earnings announcement gets really tough. I don't mind buying it until they announce because that inflation holds, it doesn't go away. But so even though you see a high IV on an option, I don't mind that. But I generally get out now before earnings. Every once in a while, I'll do a strategy over. I'm more of looking at the after effect. And so we'll look at NVIDIA after they announce, there is probably going to be a gap one way or another, right? And you look at NVIDIA in the past when they've announced, this last one, we had a gap down and then it bearish moves. We've had other times where it's been a giant gap up on NVIDIA. So I often don't really play that game of guessing. If the options are not too inflated, I can do that strangle over earnings. Otherwise, I wait for the post earnings play. And a big piece of what I look for is that gap on Nvidia, and then I'm going to go straight to AMD because I like trading the other stock, because generally AMD, they're not going to have inflated options. And so I could be a buyer of those options. That's where when you're a seller of options, inflated options, it's great, right? You want that as a seller. On the buying side, you don't want inflated options. So what I wait is after Nvidia announces, we should have a little momentum on AMD. And if Nvidia is really bullish, sometimes it'll lift up other stocks in that sector. Other times, you've probably seen this, where whatever Nvidia says, it may be really, let's say, bullish for Nvidia, but that could be sometimes bearish for their competitors, right? And so I wait until we get that announcement. I'll check on Wednesday and see what all of these stocks are doing after hours, but it all comes down to what happens Thursday morning, right? When the rubber meets the road, like what's happening? Are these stocks going up or down? Are they bullish or bearish? AMD is already in a downtrend, by the way. So they got a little overextended on Friday. They're retracing here. I would love to see their reaction, and I'm hopeful that AMD works its way up closer to a 10 moving average. See, this is why I like trading on retracements. AMD, the last time it came up close to the 10, it dropped. That's an amazing put swing trade right there. And so we're kind of like inching our way up higher again, potentially. And I don't know, we'll see what happens, but potentially Nvidia could come out and cause another meltdown in AMD. But I'll wait. I don't know. I don't care what happens either. We'll just wait and see how they announce. And we have that post earnings potential trade. But I'll be looking first at Nvidia, then at AMD, and then I go to some of the smaller ones, like or not smaller, but the more kind of boring ones. Like Qualcomm has been pretty boring lately. So stuck in a channeling pattern, but I'll see if what Nvidia says can kind of kick Qualcomm into gear somehow. Also, when they're channeling, I love selling options on stuff like this, where it's slow and sideways. So that's one thing I'll be looking at this week. Another news thing that we want to look for, by the way, and this is pertinent to really even today. If you saw over the weekend, there was some news that Trump's transition team, they wants to make some federal self-driving rules, right? So for our self-driving vehicles, so that affected this whole sector. Now, the first one you go to when you talk self-driving and things of that sort often, right, is Tesla. Tesla also, took that big run because of the election too. They set us up for really bullish entry on Friday, and that was the pullback. So you have your news-driven move, and then over here we got our pullback, right? Well, look at that. It came pretty close to a 10 exponential moving average. There was a reason to be bullish on Friday on Tesla. And that's even before the news. If you were, you just lucked out and got this big windfall, right? And if you didn't, you saw the setup on Tesla, you're ready to go bullish today. The news kind of took it away. Here, this is a level that I'm going to mark here because we gapped up on this news. And so when things gap, this is also kind of like how we could trade a post earnings trade, by the way. When something gaps on news, whether it be earnings or rules, federal rules for self-driving vehicles, it's a news-driven sort of move, and it often causes stocks to move to the extreme, as you've probably seen. So I'll come in here on Tesla, and I put an alert where we opened this morning. If Tesla drops below that level, I will probably buy a put option on Tesla to try to catch maybe a gap fill, because Tesla may weaken enough to come down and fill this gap. So this is a trade that I'm ready to go if we get that weakness. If we don't, that's fine. It doesn't matter to me. But if it happens, that's a bearish trade that I'm going to put on this week. So that's kind of a main thing that I'm looking at here. But the other thing we have to do now is also go in and look at the tandem trade, right? Who else is affected by this news? So how about this one? Have you heard of Mobileye? So this is a stock that's really interesting to me that has been coming up on my scans, and today is moving higher because of this self-driving, the regulation news. And so Mobileye, you can look at this long term. they've been much higher than they are right now. They've just weakened. The whole EV sector has been kind of weak. They've been beaten down a little bit here, but you can see where they're at. They've found maybe a pretty good support level. This is one of the charting things that I look at that will come from the price graph. It's not perfect, but it's a little bit like an inverse head and shoulders. We kind of had a little bit of support there. We dropped to a new low. And then over here, we're making more, kind of creating more support. So I call that left shoulder head, right shoulder, right? Where we're putting in a bottom. And this bottom has been developing since August. And you guys know the rules probably. The longer a pattern develops, the bigger, the better the move is, right? So you spend months putting in a bottom, it's more likely to move higher. One of the last ones, by the way, I did like this. Now, I'm not saying Mobileye is going to do this because it won't, but Carvana, way back, my trader stock, look at this. Well, here, we entered bullish positions on Carvana over in this area right over here. Let me zoom in, because they had spent months and months putting in a bottom where they had kind of a triple bottom. They rallied and then they came down again and sort of had that same pattern where they just couldn't really break down. So in this $8 to $15 price range, we picked up some Carvana. And I mean, now you can see what they did. I mean, obviously it was gigantic. So this was just, I mean, who knows? It just technically had a bullish pattern. They had potential to go higher. The fact that they went up here is just pure luck. I mean, I can't say that I knew they were going to 245. I was thinking maybe, $30. But I'm saying sometimes you end up getting this giant, great windfall, which is amazing. Not always, but sometimes. So again, I'm not saying that Mobileye is going to do this one, but I am saying they're putting in a bottom. They're in the right sector right now because they aid with this self-driving vehicle sector, right? So I'm very interested in this. And today is the day that they've just retraced and they're just starting to lift higher. So that's something that if you're interested in this, you can kind of dig into it and check out the fundamentals. The reason that I use both the daily and the 5-minute chart, by the way, is because right now I see on the 5-minute that we're slowing down a little bit. This is called a Bollinger Band top. And it's a pattern that I use and teach a lot because it's been so helpful to me over the years. And so what I do on this one, I'll hold off a little bit, but I'll put an alert in that if I like the entry this morning, by the way, here's one of our retracement entries that I love. And now it's kind of slow. And no surprise, this is the time of day that volume kind of decreases. We see, European markets closing and things kind of settle down a little bit. So I use it as a time to just regroup. And I go through and research and find my trades and I'll throw an alert here. And if Mobileye, if they break here and move to a new high on the day, then I'll probably just say, okay, I'm going to get the trade here and start with a small entry on Mobileye. But this is kind of day one of the move. So I find stuff like this can be pretty helpful. Let me show you a couple of other ones here, because Affirm set up Friday with that same pullback pattern, came back to a 10 moving average, ended up throwing a bullish engulfing candle. These are entries for us here with my group, because it's a stock that's showing signs of trending. And we've got this big momentum that picks up. Now you can see over here, when I double click, I also add volume and I'll use a MACD indicator and it kind of will help me a little bit. It's just like that one extra check. But Affirm today, I try to enter on day one or day two of the move. So Affirm is still tradable today. Another one that's kind of, let's see, SoFi is kind of similar. Yeah, SoFi also came just barely bullish engulfing on Friday, and this is lifting higher. I like this one for today. I should say today or tomorrow. See how it's already so sideways that our Bollinger Bands are kind of starting to pinch together? I generally don't enter new buys. No, on a sell side, I don't mind this time of day for selling, but for buying options, I usually wait until we at least get out of this low volume kind of lull. But SoFi is a stock that I have on my list for this week that I think you guys could check out, even here for today. Another one, this pattern that I'm showing you, you notice they all look the same. A pullback to a 10 moving average, and they all started lifting higher. And that's Coinbase, which also moved on the election with the a crypto friendly president, right? So that's what we've got going on here with Coinbase. I didn't want to buy into all of this, especially on this past Monday when they gapped up another news driven gap. But you wait a few days and we had this pullback. The gap away that held as support, basically 10 moving average held, and we started lifting higher here on Coinbase. So this is a trade both Friday and even today. And again, on the buy side, I don't enter trades right now, because sometimes what happens is we'll have a bullish morning, and then, if we end up trickling lower this afternoon, I don't want to be a buyer yet. But other times we'll have this rally, we'll have a consolidation, and then after the sideways pattern this afternoon, we'll see things push higher. That's when I buy. So just something to keep in mind. On the buy side, I kind of just lay low a little bit in the middle of the day. So that's why I often like to teach classes there, because it gives us a chance to look at the patterns and learn, and then also find trade ideas, right? So where I regroup and research and figure out where I want to go. A couple of other trade ideas for this week. SMR. So now, actually, hang on. Let me finish that thought with the self-driving rules, because real quick, I showed you Tesla. Mobileye. We've got that one. Another one that can benefit from that news is Aurora Innovation. This is a cheapy little stock. And I don't do a lot with these often when they're this cheap, but because sometimes they trade kind of like a meme stock. This one, they might even still have some room to go, because they gapped down on earnings, which obviously they did not do well. And but we're moving into this gap area. This is kind of what I look for in a post earnings trade, by the way, to kind of circle back around to that. After earnings, if you are left with a gap, often I'm looking for a fill of that gap. And so here we moved into that gap area, which means potentially we could, pop up here to around 680, where we have another round of resistance. Obviously, trading now 620 to 680, that's not a big deal. And I think we're probably a little bit overbought from this morning, but this would be something maybe longer term to kind of keep an eye on as a cheap little stock that may be able to benefit from the news in this sector, right? And there'll be another drawdown on this one too, or if you want to catch a little piece of it, or if you want to dig in and see, are there any reasons to buy this stock long here and hang on to it? There might be. So these are all things that you just kind of build a watch list with when it pertains to anytime there's news on self-driving stuff. And if you get in ahead of time on the pullbacks, then you could be like that Tesla trade where we had a reason to buy on Friday, and then you just benefited from the news today. So I think that's a great way to go, especially when you're going long stock or a longer dated call option. That's generally what I would do. One other stock that's going to move on this, anytime there is good news on that front, it hurts Uber, which is so great. And I love this. This is a day one breakdown on Uber, and Uber meets my criteria for really kind of a trending stock. It's almost like they're just starting. They gapped down over here on news, right, on their earnings. But after a little volatility, we had this rally. They came up, they hit the 10 moving average. And today we're getting killed because of this news. So this is kind of like a day one move on Uber. Right now, look at how flat and sideways the stock has gone. Sold off really well this morning, gap down, good momentum for the first half hour, and now nothing. Not too surprising, but if we make another leg down this afternoon, this could be another trade. Now, the next thing I do, let's make sure we're not sitting on a big support level, right? So I'll back my chart up here and say, okay, there's a little support. So we did hit that. We did hit that support. If we can break down again, we're probably going right through that support, and we have potentially down to that mid, kind of that low 62.50. There's a gap. There's support even below that. Those are horizontal levels, are just potential targets, not a guarantee, as you know. But I would look at Uber maybe as a bear trade for today. So these are things that I build my watch list with. Couple of others. Let me give you a couple that are on my radar for this week. And this is what I'd like to do at the start of the week, just kind of have a plan. SMR was one of my planned entries because of how they closed Friday. So look at this. It's a stock that's in an uptrend, that is pulled back to a moving average that in the past has held as support. So I often don't buy on that down day, but I wait to see if we lift higher, and guess what we're doing today? This, by the way, is a sector that I've really been bullish on. I've been bullish on it for a long time, but it's finally starting to catch kind of some headlines. And it's the small mobile reactors, right? Because I think we need energy. And I won't go too deep into this, but this is part of me just geeking out on weird news and information and whatnot. But for years, I've thought the push into some of these, solar and wind, it's all great, but they definitely have their downsides that haven't much been talked about. But nuclear, the new, pebble bed reactor nuclear is the way to go. Especially, I mean, we were already with EVs. We don't have the energy to power all the EVs. I mean, just, spend a little bit of time in California with the rolling blackouts, so trying to charge an EV there, tough. But nuclear has such a clean way to go. It just has such a bad rap because of all of the bad things that have happened with nuclear over the years. But the cleaner pebble bed reactors have a smaller footprint. I just think it's the way to go. Anyway, and this was just proven not too long ago, maybe a month ago now? I was cracking up when Microsoft came out and invested heavily in nuclear. Now they're showing their cards. They talk big about green, but this is probably truly one of the greenest ways to go. So anyway, I love this, and SMR is just one of those stocks, and this is another buy point for me. So they're moving really well today. So we might even get another pullback intraday. But to me, again, I'm trying to get in on day one or day two as a buyer of options, and I'm going to buy a little bit of time or buy stock and hang on to these, and then we can tweak the stock by selling calls on pullback times, where it looks like it's overextended, things of that sort. But SMR is an entry today with this bounce. So I like this one. Square is another one that had a similar pullback. They started to bounce a little bit on Friday. They never quite hit my bull entry, but they were close. Today they hit my entry. So from this morning and then even this afternoon, we see them really slow here. So Square is another one. If they take off, this is another good stock for this week that things are starting to move. VST is another one I was going to show you. So this is kind of a breakout, a little bit of a different pattern. It had a lot of resistance, and they broke out above the resistance and then retraced and hit a moving average, and they're taking off. So these patterns that they just tend to show us that there is still some interest there. There's some momentum. There's a little bit of that trending sort of behavior here. And this is putting in a Bollinger top, which is telling us right now, if you didn't already get in VST, it's not the time here. But later today, even tomorrow or the next day, it's not too late to do these trades, especially when you're getting in on day one or day two. So let me know if this is helpful or not, or if you have any questions, but I'm looking mainly for patterns to tell us where we have entries, right? And these are still stocks that are tradable. One that so this is a little bit different. I also look for things that go to extreme, way too high or way too low. I think this XLV, I love trading some of the ETFs. I mentioned I trade the spiders a lot. I also have done more with the XLV this year than ever before. And I just like it a lot. It's been down, look, 1, 2, 3, 4, 5 days, 6 days in a row. We've been really pretty bearish. At some point, we get overextended to the point you have a pretty big bounce. So we're not there yet. This isn't ready to go, but I am looking for a little bit of that bullish, what I would call just a bullish retracement trade, which you could sell options. I will often buy a call option and just a front week option, and I'll be in. I'll have a very tight stop because you're kind of going against the momentum here, but it would take a rally here above right there, just at about 142. And then we're above this consolidation from this morning, and then I would catch a bullish trade. I obviously want to see volume picking up. So I'll check out our volume. I want to see if that's picking up. And then that would be a bullish, sort of an oversold retracement trade that I would look at. But for kind of big picture watch list this week, I like having these self-driving vehicles, that idea, the Mobileye and Aurora and Uber and Tesla. And then I like these stocks that have pulled back that are just starting to bounce. Oh, and then the other thing, let me give you, just if you guys want, if this is helpful, if not, you can just ignore this part, but stocks that are announcing earnings this week that I'm most excited about, I kind of rattled it off earlier, but Lowe's post earnings could give us somewhat of a trend. And you can see today they're moving up pretty nicely into their earnings, and they're going to announce here tomorrow morning. So I'm looking at Lowe's, I'm looking at TJ Maxx or TJX companies now as a post earnings trade. Target is another great one. And when Target announces, I'm not only going to look at Target that has been really pretty flat, I also pair that with Walmart, because maybe Target gaps too far. We see this a lot when a company announces, sometimes they just gap and then they don't do anything intraday. I have to say, I miss the days way back where we used to see companies announce during market hours. That was amazing because you could actually trade it. Now you're kind of left with just dealing with what happens after the gap, which is okay. But look at Walmart. Walmart has been spectacular since their split, and they've been in this perpetual uptrend. And so I have a lot of long Walmart positions, but right now today they're starting to break their uptrend a little bit. They're pushing down below the 10 moving average, right? And then when Target announces Wednesday morning, what Target says might affect Walmart, maybe not. Walmart announces even before, so it might take this away. So Walmart is announcing tomorrow morning. So I'll flip this. I'll look at Walmart tomorrow morning and see if it affects Target. When Target announces Wednesday morning, they could affect Walmart, but we already know what their earnings are. So the one that we don't know is Target, right? I don't know if I'm saying this the right way, but when Walmart announces, there's going to be a lot of inferring of, okay, whatever Walmart says about foot traffic or what they're selling or how the sales went, how their holiday outlook is, are they expecting good foot traffic and good sales during Black Friday? Things of that sort might come out. That's going to be inferred that if Walmart is seeing good foot traffic, Target probably is as well. Things like that. If their online business is going well, maybe Target's is. And so you get that tandem trade. So tomorrow morning with Walmart, check out Walmart, and then also check out Target. The next day when Target announces, see if they gap, if they move, we may have a trade on Walmart. It's more likely to go the opposite direction here. But those are some of the biggies. And then of course we go to NVIDIA Wednesday night. Thursday morning will be all about NVIDIA. And then Thursday after the close, Ross Stores announces. And that one has often been a fun post-earnings trade for me, as well as Gap. So these are some of my favorite retail companies that are announcing this week. And again, on a lot of these, I'll just wait on the sidelines until after they announce. Especially with like a Gap, they're not trending, they're sideways, there's nothing happening. If a stock is actually in a trend before earnings, I love trading that. And we used to have that a lot, but now we have less of that. Like Gap, not doing much. It might be their earnings that will kick them out of this real sideways kind of a rectangle pattern here, or line-based pattern. I call it just a Bollinger Band pinch, where we're just flat. So after the earnings, we'll probably get some kind of a breakout of that. But these are things that I look at heading into this week, where we're still in an earnings season. So I don't know. Let me know. Do you guys have any comments, any questions? Is this helpful? Is it not?
I have a stock for you.
Oh yeah. Sorry, John, hang on. Go ahead.
I have a stock for you, Palantir, PLTR.
Oh, I love it. One of my favorites. Yep. And I'm glad you brought this up, because this has been when we picked up on pullbacks, and I love what they're doing here today. They're drawing down a little bit. So it's a little odd, just this one update. Usually stocks will have 2 or 3 or 4 updates in a row and then the pullback. But I love the pullback today. So I didn't do anything with them this morning. I probably should have caught them over here. But what I'm thinking is, however they resolve as they're moving into this Bollinger Band pinch, we might have an entry here. Are you guys doing much with this?
We're holding Palantir in our 3-stock strategy, and we bought in on the 8th. So we are up around 11 or 12% right now.
Nice. Yeah, I love it. This has been on our list for sure. I have some long just stock. And this one, I might just do an option trade. I might buy calls. We'll see. But like, I
And
love
then,
this. Yeah, go ahead.
well, then it was Friday that it was between Thursday and Friday that it was announced they were being added to the NASDAQ 100. So I was intrigued by the pullback today, because once they get added, you're going to have pretty significant rebalancing of certain ETFs and funds that track the NASDAQ.
Right. And the recent, the other additions have done really well. One of the things, so this is, I'll sometimes go to Yahoo Finance. Yahoo Finance is not the end all for news for sure. But sometimes you'll see a little headline because I wondered the same thing. Oh, maybe it's, nope, rising tensions. Is that it? It could be, I don't know. I don't know why, but I was thinking the same thing. I was surprised it was coming down. I'm glad. I love it when things pull back. They've been heavily engaged in Ukraine's defense efforts. So I don't know, maybe it's something with that news. But yeah, to me, I love this. And sorry, were you done with this? I was just gonna say, I
was giving it to you to do with as you please.
Yeah. Just the pullback area. And it's funny, you can chase things. I just, as an option buyer, what has happened more these days than let's say in years past is that options get inflated pretty quickly. And so if I'm a buyer of options, I just have learned I can't buy after a stock has been up 4 days in a row, right? Or big giant news day. It's just too late. They're going to be expensive. And if an option is expensive and then a stock draws down on you, you just lose all that inflation, right? That you paid for, which that I'm just building a perfect case for just being a seller of options. I realize that. So be a seller there or buy on the pullbacks, right? And then stock, obviously buying stock. I love this one for a stock buy because who cares if your timing is perfect? Over time, this one's going to be a great buy. So I'm liking this pullback here that we got today because I didn't expect it. I thought maybe we would continue moving day two, moving higher. But to me, like right now, since I didn't pick it up over here, which there was a pretty good argument because we were at close to the 10 moving average and we were right at this little congestion area, little bit of support there. But now that we've flattened out and you can see this Bollinger Band pinch developing, I'll use these trading view alerts and I'll throw that here. And if I get the alert, I'll pick up a bull position or maybe I'll buy a little more stock right here. Yeah, I love it.
Let me throw some of the questions out that are on our Traders Reserve platform that you can't see yet.
Oh, perfect. Yeah.
So when you and I were talking as you and I have been talking over the last couple of weeks, I told you that it wouldn't be long before somebody would ask one specific question, which was, so is Marquet taking over an existing service or starting a new one? I told you it would happen, right?
Oh, you did.
Let's see. Brad asks, Brad's a stock and options trader with our services. He asks, how many trades do you make in a typical day or week?
Gosh, it really depends. Depends on the markets. Like last week, I only did a few trades. I didn't do much at all last week. I'll show you why. I didn't like where the markets were. The week before, I traded a lot. So it kind of depends. Last week, we were retracing. I felt like we got too hot. We needed to pull back. So I did a few. But I would say 3 to 5. I'm not a like crazy super active trader, but I go for more swing trades where I'm in for 3 to 5 days or a couple weeks or more. So there are either 3 to 5 on like a slow week. There are other days that I'm more active, and when I do some day trades, which isn't a ton, then I'm more like I could be 10 to 20, but that's a lot. That's a lot for me. The time that I broke the market, I had 13 open trades, different trades on different stocks. That was 2000. I try not to do that too often, but to be in and out and close trades out, then if I'm day trading, I'll get, closer to 20. But I'm really kind of going for fewer trades, bigger profit per trade.
When you are trading, how long do you hold your position as a call or a put on average or typically?
The call or put on average is probably these markets right now it really is 3 to 5 days. I've got a handful that'll carry for almost 2 weeks, but generally I'm looking for that swing trade, that in and out.
That's from Paul, another longtime member here at Traders Reserve. Anita, a quick shout out. This is introducing a wider breadth of everything from technical analysis and charting, not specifically just around buying options, but buying options is a tactic that Marquet uses. And but she also is an option seller from time to time. So it's the technical side that we're exploring and how that can help either the buyer or the seller of the option based on what she's looking at on different stocks and the approach that she's using. But
Yeah, and
I think go ahead, please.
oh, I was just gonna say real quick, John, the thing is the chart just tells you whether you should be bullish, bearish, or neutral, right? So like credit spreads. It doesn't matter what your strategy is. And there's a really good case for just being a seller. I could also build a case for just being a buyer, right? They all have their pros and cons. So I don't think it really matters. I think you find what you are comfortable with and what you really get. And then the chart it's fine. Cause like where maybe I'm a buyer of a call, you could be selling puts, and it's great. So it all works together.
And Brad wants to know how many trades it took for you to turn the 2,000 into 2 million.
Oh, geez. I don't know. I never counted the trades. It was 2 years. I can tell you my best trade in that run. I bought 10 contracts on Qualcomm and I made $300,000 on that. It was a $24,000 investment and turned it into $324,000. So that was a big one. But yeah, there was a lot of trades. I don't know. I still have my trading records. I still have them paper in a binder, and the SEC has viewed them. They are, a bit vetted. Like it's all there. If you want to see them, you can check them out.
Now, the way that you use the technical analysis, these combinations of patterns, et cetera, does that help you determine how far out you want to be in terms of an options trade or a stock trade? In other words, if you're buying or selling premium for the week or a couple of weeks out, how does that inform your time and trade objective?
I'm sorry, at the start, did you ask how does the chart inform it?
The way that you interpret price action from your charting and technical analysis, does that help you determine whether you want to sell this week's option or farther out option?
Yep, absolutely. So I can show you right here on the spiders. For instance, when we have something like this where the spiders are kind of in this time frame over here, we were in a trending pattern. I would buy more time if I'm a buyer, just because I know there's a potential this trend can keep going. That's how I made a lot of my money, was just buying. I used to buy months of time. Now longer time is 2 or 3 weeks of time, but I want to catch more of that trend. Right now, today, with what is happening, from Friday on, actually, hold on, starting here, I've been buying only front week options because I felt like that move was so big that we're going to have a pullback. So there was no need to buy more time because I knew I wasn't going to want to own a call option over the weekend. All right, so I was front week here. Last week I was buying front week. This week so far, I'm still buying front week because we're at technically a break of the uptrend. This bounce, I'm still skeptical of this bounce, right? Look at what we did. I showed you where my level was. We came right up and hit it and dropped. So I was worried about this 10 moving average. I was worried about Friday's gap down holding as resistance. Look on the 5-minute, that's exactly what happened. So not that I'm always exactly right, but I just wanted to be more on the shorter term so that I could pull the trade off in case this ends up breaking down, in case this becomes a falling 3 pattern, which if you guys don't know what that is, it's just a big red candle down and you have a bounce that sometimes sucks all the bulls in before you make another leg down, right? It's kind of a head fake pattern. So I'm still not sure where we're going long-term. So I'm keeping front week options.
And by front week, do you mean this Friday's expiration?
This Friday. Yep. This Friday.
Okay. All right. Excuse me. So there's still plenty of questions around the trading process. And the good news is we have lots of answers for you on those in just a few minutes. Everybody wants to know about your $300,000 trade on Qualcomm. How long were you in that trade? Do you know? Do you remember?
Yeah, that was 20 days. And I mean, Yeah, it was crazy. I was in Hawaii and I had to call my broker. I'm like, we need to get out of this. I had to visually describe like over the phone, describe the chart pattern to me because I was away from my computer. I was at the beach. I'm like, could you explain to me what you're seeing with the candles in relation to the moving averages? And he told me, and I said, yep, pull the trade. So back in the day when you had full service brokers that you called. So
I'm going to steal the screen back from you
yep,
so
you
that
got
we
it. I'm gonna
can
stop right here.
stay on. And let's see here. So some of the things that are coming from the discussions that Marquet and I have had, something along the lines of what we've just gone through with her, a Monday market analysis. We'll look to roll something like that out at the beginning of the new year. Obviously, with holidays coming up between now and the end of the year, and planning for the new year, we have plenty to do. We have a lot of trading still to do, so we need to stay focused. And Marquet and I will be in pretty deep discussions about how to approach a partnership for next year and beyond. One of the ways that we're going to begin that partnership is by holding workshops. And the first workshop will be planned in December and a second workshop in January. And in addition to that, those of you who have tickets to Investors Blueprint Live, you now have a special guest, Marquet Latimer, who will be holding training sessions and maybe trading sessions during the Investors Blueprint Live event February 24, 25, 2025. That's a lot of 25s in one sentence. But more importantly, this gives us a way to expand into stocks, into technical analysis, into charting practices, so that you have more ability to make, not just make decisions about trades you want to make on your own, but even a way to backstop some of the trades that we're making with you. Maybe we're bullish and you're bearish, or this leads you to a different conclusion. And that can help you in your trading and in your longer term view, wider view of the market. So one of the things that we are going to start with is essentially a deeper dive on what Marquet walked through with you here this morning, which is profitable chart patterns. And this will be a workshop that we'll be holding in December. It'll be Tuesday, December 10th, and from 1 to 3 p.m. Eastern time, essentially boiling this down into a simpler 3-step approach to charting so that you can pick those entries, you can identify those exits, and apply them to several trades during the workshop so that you can answer some of those questions like, am I going to trade the front week? Am I going to trade farther out? Am I a buyer or am I a seller? Am I short? Am I long? How do the chart patterns make those decisions or help you arrive at those decisions, and then help you execute the trades both on the in and on the outsides? So that will be Tuesday, December 10th. That will be our first workshop upcoming with Marquet. We will have early registration, which I'll open up for you here in just a moment. This will be a 2-hour hands-on interactive teaching and trading workshop. Consider it more in depth and with more background behind such things as the way that she uses candlesticks, moving averages, and even for those who are interested, Bollinger Bands, but how those 3 pieces come together to identify those chart patterns that she's looking for those entry points and those exit points, and then makes decisions about going and taking those trades. Now, I'm not promising you that you're going to turn a $24,000 trade into $324,000 because I can't do that. But if you have an idea of when to buy and when to sell, then you have the path toward better profits as a trader. And that's the key element here. So this workshop, because it will be the first workshop with her, we are going to limit seats to roughly 50 people. They will be held on the Traders Reserve Live platform. So for those of you who are part of Traders Reserve, you already know how to get in. And for those of you who may not yet be, we have a simple, easy to use platform. All of our live streaming is done through it, and the chat and our trade alerts, everything on a single platform. This workshop will also be recorded so that you have access to it post-workshop. So you don't just learn from it once, you can learn from it ongoing. When we release this to the public, which we have not done yet, the regular price, the charter price will be $495. The early registration discount price today will be $295. You'll have a few days to take advantage of that. And then I believe this weekend we'll be taking this to all of our members, all of our followers, and all of our subscribers. So if you want to learn how Marquet picks those entry points, how she decides between the stock or the option trade, whether she's long or short, this workshop will help you to answer those questions and give you the ability to take that and start using it with your own trading. As we make other programs, together, we'll keep releasing them in workshop form or other forms. We're having several discussions about what the future holds. To have someone who is currently a professional trader, who has proven ability to generate returns in the market, who has expanded her following over the years by, in essence, doing what she just did with you, walking through the charts, the rationale, the reason for a stock moving higher or lower, when to get in, when to avoid getting in. Those are the main reasons that I felt she filled a significant gap for us at Traders Reserve, as well as being on the stock side, which, I kind of am and I'm not, because I run the business. Granted, I gave you all Palantir, but I don't know how long that's going to be good for. And I think next year is going to be a stock picker's year. And that means sector analysis, as she did with looking at different spiders, looking at the healthcare spider, especially in a significant downtrend, looking at individual stocks, whether in tech, or walking you through a thesis on EVs, on nuclear, mini reactors, if you will. There's no shortage of ways that she can help you. And we are only on day one of that process. So patience, but join up for this workshop so that she can take you inside her thought process behind charting to develop profits from stocks or options, maybe even stocks and options, depending on how you put those trades together. So I'm going to walk back through for a couple of people who were late. Excuse me while I go backwards. A quick update on the big news of the day. And while I'm doing that, the link will appear for folks in both the Zoom chat and on Traders Reserve platform for this is a one-time workshop, just the 2-hour workshop. This is just the starting point for us as we continue to build ideas with Marquet about the future. And but for those of you who missed the first few minutes of the presentation today, the main change is email alerts will be coming to you via the Traders Reserve Live platform. This will mean that email alerts will look different. More importantly, and Marquet, you know what? Take a second and say goodbye. I know you have to pop off to your usual folks, so feel free to just talk over me for a second.
Okay, yeah, thank you. I'm sorry about that. Sorry, guys, I gotta run. But thank you for letting me hang out with you guys. And it's fun. I love it. I love the charting piece. Just remember, your strategies don't have to change. If you have something that works, stick with it. I feel like there's always something in the chart that could take you maybe a little bit to maybe a little bit more profitability or something. I think for me, the charts made such a significant difference. And if you're probably already using them on some level, just continue hone those skills, because it can make all the difference in the world. I feel like the timing is more important than even the strategy, right? So all strategies work. It's just the timing. That was the piece I was missing back till before I got the help from Richard, who, by the way, to finish my thing I started earlier, in trying to prove him wrong to get his help, I became a firm believer in charting. It made such a difference for me in that timing. So I'll leave you with that. Thank you so much for letting me join you guys.
Thanks, Marquet.
Kevin. Absolutely. I'll see you.
All right. For those of you who are attending Income Madness, the Income Madness will be in the Income Masters room. If you go to the left-hand side, the navigation bar on the Traders Reserve Live platform, under live trading, you will find the Income Masters room for KFFFF. I don't know how many Fs were in there. There were a lot of Fs in there. No, that will be in the Income Masters room. So you just change rooms. Once I close this out, the video will go away, everything will go away, and it'll be you'll be all set to just join the other room. But again, on the email alerts, it means that email alerts will contain trade execution details only. It will mean more email trade alerts because we will have a one-to-one relationship, one alert per email. And then what will happen is the text, excuse me, I'm going to skip over that one. All of the text that we have typically provided inside of the email alerts will be moved to a section on the Traders Reserve Live site called Alert Posts. We've been populating that since we launched this new platform. So they're already there and we're already doing it. It is the rationale, the why, the details, etc. Those are the parts that will be stripped out of email and will be solely inside of alert posts for you. So I think it was VJ who was late and missed that. That was the major change. That is the major change. And that change will begin here somewhere in the next 10 to 14 days or 7 to 10 days, roughly. If it's close to the holiday next week, I'm not going to do it until after Thanksgiving. If it happens to get tested and it works fine this week, I may run it start it before Thanksgiving, but I don't foresee that happening. I just don't see us having a significant amount of trading volume early next week. So United States should absolutely be on there as a country. Hang on just a second. Let me fix that 1 second. Thanks for the heads up on that HHH. I don't know why that's not appearing. I had checked and double checked that one earlier. So I'm going to do the simple thing here. And hopefully I didn't mess anybody up, but I just removed it for the moment. I had no idea why it wouldn't be on there. I mean, in fact, we don't need billing state, but I'll leave billing state in there for now. All right, I removed the country field, so that should be operational now. I will look into that. Thanks for the heads up. It's supposed to be the very first field. So why that didn't happen is not common. So at any rate, give that a try again. We'll get an email out to everyone reminding you about this process. And outside of that, I think that does it. That's essentially a replacement for IQ, possibly. So very excited to have Marquet with us. Thanks for all the great questions and for your time today. Again, I know everybody has a number of you have madness, so I'm going to stop sharing and get us out of here so that folks can get over there and get ready to start trading today. So thanks again for joining me. John Hutchinson here with Traders Reserve, and we'll have Marquet again very soon for another webinar in the next couple of weeks.